Good day, everyone, and compliments of the season. You are welcome to this week's Business and Investment Tips program, a production of RCCG Christ Church Radio with Ayodeji Ebo, an investment professional. This week, the focus is on reducing the impact of inflation on your savings. The National Bureau of Statistics recently published Nigeria's November 2022 inflation numbers, which showed a rise in inflation to 21.47% year-on-year in November 2022 from 21.09% year-on-year in October 2022. The inflation rate opened the year 2022 at 15.6%, recording a 5.87 percentage point increase as at November 2022. The year-on-year data measures price changes between November 2022 and the corresponding period of 2021. Despite the significant increase in fixed income rates, average Treasury bills rate increased from 4.4% in January 2022 to 10.7% as of November 2022. The real return on savings and investment remains negative. This means that the inflation rate is higher than the return on savings and investment. Inflation measures the sustained increase in the prices of goods and services in an economy over a specified period. Due to inflation, a naira today will buy less goods and services next year or in 10 years, a reduction in the purchasing power of money. It is therefore essential to employ the right strategies to hedge against inflation. The focus this week is to suggest ways you can reduce the impact of inflation on your savings and investments. As a new investor, you may be discouraged by the potential return on your savings or investment. You might consider it too low due to the high inflation rate. However, because of the negative impact of inflation, you should not leave funds idle in your bank account. For instance, if you invested 1 million naira in a fixed income instrument at 10% per annum, the expected interest rate after 1 year would be 100,000 naira. This may be discouraging, but leaving your funds in your bank account would be worse. The real value of your savings after 1 year, assuming the current inflation rate, will be 785,343 naira. Hence, your savings will reduce by 214,657 naira in real terms. If you invest in fixed income, you would have reduced the impact of inflation by 100,000, thereby limiting the reduction in the real value of your savings to 114,657 naira. Some of the investment strategies to consider are: 1. If you have zero tolerance for risk and a short-term investment horizon, you can invest in Treasury bills currently with an average yield of 8%, though it offers a low interest rate compared to other forms of fixed income investment like commercial paper and fixed deposit. The minimum amount can be as low as 100,000 naira depending on the investment outfit. 2. For investors with a low risk appetite and long-term investment horizon, investment in federal government savings bond will be recommended. The minimum investment is 5,000 naira and it is issued monthly. The November offer for 2 and 3 year bonds were issued at 12.25% and 13.25% per annum respectively. You will earn this return for the next 2 or 3 years. Interest is paid every 3 months, that is quarterly, and paid directly to your registered bank account. 3. For investors with a moderate risk appetite, investment in commercial paper (CP) will be recommended as it commands a higher interest rate than Treasury bills. It's important to ensure that the issuer is highly rated before investing. Kindly listen to our podcast on investing in commercial papers. 4. Invest in dollar-denominated assets. This can be in the form of investment in dollar mutual funds, dollar savings, euro bonds, or foreign stocks. The naira value of your dollar investment increases when the naira is devalued, hence reducing the impact of imported inflation. Kindly listen to our episode on investing in dollar-denominated assets for more details. 5. Alternative asset. This is for investors with a high risk appetite. Some suggested investment options include real estate, agriculture, and cryptocurrency. This requires a high level of due diligence before committing. To reiterate, doing nothing should not be an option, that is, leaving your funds in your bank account, but the focus should be on reducing the impact of inflation on your savings. Thank you for listening. Please join us same time next week for another exciting and interesting session. For comments and feedback, kindly forward to ebo.ayodeji@gmail.com or send SMS to 070-8246-3747. Stay blessed.